What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Linder. A little bit different today. I'm standing because I tweaked my back, so not liking sitting down very long. We are going to have a good Friday show. I'm going to go over my latest piece on Forbes that came out yesterday. It is about quantum computing threat and Bitcoin. Then maybe go over another piece from a little bit further back on Forbes, which I don't know if I've covered here before. And then maybe answer your questions, look at the charts, just hang out a little bit on Friday. So let's go in and share the screen. Of course, we have to start at bitcoinandmarkets.com. Let me fix my mic here real quick. At bitcoinandmarkets.com, it's where all my stuff comes out. I've had some good posts here this week. Today, I put out a quick one for the premium folks, and we looked at the 10-year yield and CPI connection. So check that out if you guys are members. And if you want to check those out, become a premium member. Also answering the Bitcoin critics of the Bitcoin reserve bill. That one was pretty good. You can check that out as well. And so what are we looking at today? We are going to go into this quantum computing post. If Forbes will load, here we go. So zoom in here a little bit. I have been a Forbes contributor for a few months, and I don't write as much as I should for them. It's a little bit different audience than my stuff on my website. So, it's hard to know exactly what is going to resonate over there. And some of my stuff being very Bitcoin only and hardcore Bitcoin maximalist gets edited and stuff like that. So, it's hard for me to figure out exactly what to write for them over there. But this was a good one, and it's done very well. So we're going to go over here today. Title, Google's quantum computing leap, what it means for Bitcoin security. You probably heard a lot of naysayers out there. There was a lot of skeptics talking and dissing on Bitcoin during the recent Google announcement of their new chip. That's what the main topic of this is, or what I am responding to. So, and I am live streaming on YouTube, Rumble, Twitter, and Telegram. So if you're watching over there on X, pinned tweet, you can find the link to the YouTube and Rumble. Go over there, like, comment, subscribe so you don't miss a live stream, and it's easier to interact with people. So hopefully we get some chat going on here, and I can answer some of your questions. But all right, so starting into this, the Google CEO, Sundar Pichai, he had a tweet about the new chip Willow, and it caused a few waves in the Bitcoin investment community and was like chum in the water for Bitcoin skeptics. Grieger Capital sent a viral tweet declaring Bitcoin is dead, but he did say it was a joke. And scores of skeptics jumped on the chance to disparage Bitcoin. Every few years, perhaps instigated by successive Google chip announcements. So I think the last one might have been 2019, I think. And maybe that was the last time we had this big kind of worry in Bitcoin about quantum computing. But it is a reoccurring thing in Bitcoin. And so we had to go through every time and debunk this. And this was my attempt to have something on Forbes that, when people search for Bitcoin and quantum computing, that this would have good results for that. Anyway, so fears involving Bitcoin, they get in the news cycle. But are the fears justified? Let's see. So quantum computing 101. I'm no expert here, but I can Google and I can read. So this is very, very basics. They are unlike classical computers that use ones and zeros. They use ones, zeros, and both, or simultaneous. They have a third bit, a quantum bit, using superposition. So this allows quantum computers to perform certain types of calculations exponentially faster than traditional computers, like in a week or a day versus a billion years. So way, way faster. Quantum computers, that's theoretical though. Quantum computers also leverage entanglement, where the state of one qubit is directly related to another. They use previously designed quantum algorithms like Shor's and Grover's. So those guys were early in the theoretical part of quantum computing, and they designed algorithms that they thought would work with quantum chips, qubits, to be able to hack some of these like encryption algorithms or hash functions or whatever. So these are like techniques, Shor's and Grover's, as far as I understand. And yeah, so they can solve these math problems that would normally take a billion years very, very quickly. But there's a catch. Current machines are error prone, require extreme conditions like near absolute zero temperatures, and are far from the scale needed to tackle real world cryptographic systems like public key cryptography or Bitcoin. All right, so Bitcoin's cryptography and the quantum threat. Bitcoin relies on SHA-256. I tried to do as much linking as I could in this piece, for readers to go and learn a little bit more. A cryptographic algorithm that secures its proof of work mining, blockchain, and modern wallets. And you guys watching this, you're probably deep into Bitcoin. You know, this isn't exactly perfectly worded, but for the normies, it is. So that's one of the difficulties in writing for these different outlets. This cryptography ensures that Bitcoin is highly resistant to traditional computing attacks, from rewriting history or cracking private keys and stealing funds. For instance, brute forcing a Bitcoin private key would take 2 to the 256th power operations, a number so large it's effectively impossible. I think, isn't this more than the atoms in the universe or something? I mean, it's a gigantic number. Quantum computers theoretically could use Grover's algorithm to reduce the required operations in half, or half of the exponent, 2 to the 128th, making the problem more approachable in principle. However, this still demands computational resources on a scale humanity is far from achieving. For example, the University of Sussex estimates that breaking SHA-256 within a practical time frame, and they did, I think, 1 day, was 13 million qubits, and 1 hour would be 317 million qubits, depending on the desired speed of the operation. By comparison, Google's Willow chip has 105 qubits. Moreover, Bitcoin developers have been aware of the potential quantum threat from the very beginning. Bitcoin creator Satoshi Nakamoto addressed the threat in 2010, and the quantum computing page on the Bitcoin in 2016. Bitcoin's best practices were also created with this kind of attack in mind. It is standard to use addresses only once in wallets, which minimize exposure to these threats. Public keys and the associated signature are only revealed when a transaction is sent or it is confirmed, in that little window of time when it's in the mempool, giving a quantum attacker only a short window to compromise the keys before funds are moved to a new key in the new block. So going back to here, we're talking about 317 million qubits needed for 1 hour. But if we are talking about 2 minutes in the mempool before it gets confirmed, it's even exponentially more than that. So it might be 1 billion qubits to break it in a very short period of time, and even then it would have to be enough time then to react and send a replace by fee or whatever. I mean, it is a very, very high bar, the number of qubits and the speed at which this attack has to happen. Now, stagnant addresses are attackable, definitely, like Satoshi's old keys or lost keys or whatever. Those are definitely attackable by the 13 million or even fewer, maybe 1 million qubits, something like that. But it would still take a long time. 1 million qubits, we're talking weeks maybe, but it's still very possible. Where now it takes 1 billion years, it'll take a week with 1 million qubits. All right. This is what Satoshi said. He said SHA-256 is very strong. It's not like the incremental step from MD5 to SHA-1. It can last several decades unless there's some massive breakthrough attack, blah, blah, blah. You guys could check that out. And I did link to this. I went back on Bitcoin Talk and found the post. So that's what I linked to right here in Satoshi Nakamoto, if you're interested. All right, next section, quantum hype versus reality. Physicist Sabine Hassenfelder has she's a celebrity physicist, influencer on YouTube and stuff. She has some good stuff, and she's skeptical of everything. I think she is critical of people and in physicists in the field and the direction of physics a lot of times and things like that. So I do trust a lot of what she says. Um, so she's critiqued Google's quantum supremacy claims as exaggerated. She noted that similar claims in 2019 involving a 50 qubit chip were quickly questioned by IBM, later replicated on a conventional computer within a comparable time frame. So that's pretty bad. That's pretty bad for Google there. According to her, while the Willow announcement is scientifically impressive, quote, the consequences for everyday life are zero. Mathematician and computer scientist Gil Kalai echoed this sentiment. In a blog post from the day of the Willow announcement, he urged caution, saying, quote, quantum AI's claims, including published ones, should be approached with caution, particularly those of an extraordinary nature. These claims may stem from significant methodological errors and, as such, may reflect the researcher's expectations more than objective scientific reality. And I recommend going to read that blog post. He steps through the claim and the lack of data. And so pointing out, he's concentrating mainly on 2019 because, there haven't really been anything published, I think, for this new Willow one. But it is highly questionable, that 2019 paper. And he points out some good stuff there. So moving on here, by most measures, quantum computing remains in its infancy. Advances like Quantum's Willow chip are far from capable of cracking SHA-256 or disrupting Bitcoin's network. Long before reaching that point, other cryptographic systems such as RSA and ECC, widely used in financial services, secure messaging, and military applications. So HTTPS uses RSA, I believe. The military secret network will use the same thing. It'll just be on a different network. All of your secure messaging, encrypted messaging, that would all use stuff that's easily crackable with way before Bitcoin, way before SHA-256. And so those would likely be compromised as they are more vulnerable to quantum attacks than hashing algorithms like SHA-256. This means Bitcoin is arguably more secure than many of today's traditional systems. That's important. So in a quantum attack, banks are first, the digital dollars in the banks are first at risk, long before Bitcoin would be at risk, at least one cycle, like a couple years, right? If we're talking Moore's Law, it would be one full cycle before Bitcoin is vulnerable. The traditional financial system would be vulnerable. And so where would people go in that meantime? Probably into Bitcoin. And also in that meantime, 2 years, plenty of time to update the protocol. So we'll get to that here. The energy requirements and cost of large-scale quantum computing operations would initially be economically prohibitive, limiting them to governments or major corporations. These entities, however, have strong incentive to avoid destabilizing markets by using quantum computing maliciously. Additionally, if quantum computing posed an immediate threat to Bitcoin, it would already be reflected in its market price. The first experimental qubits were demonstrated in 1998, predating Bitcoin by a decade. This long development timeline has given markets ample time to price in the potential trajectory of quantum computing and its implications for Bitcoin security, even influencing Bitcoin's design from the outset. So he would have picked a different algorithm that is even more quantum resistant from the outset if this was a major issue. I mean, and the claims back in 1998 were probably way bigger than they are today. Like, I bet you go back there and they say by 2010, we're going to have these super quantum computers. So everything continues to get pushed back. Bitcoin can adapt if necessary. Before I get into this, let me check the chat. Justin, ECC is used in Bitcoin. Yes, EC is it ECDSA? I think it's used in creating addresses. Is that right? I'm not sure, but Not all. It's just the new ones do not use it. Justin, you say you don't like the priced in thesis because most people don't understand the attack surface size. I would say all people don't understand the attack surface size. All people, even the experts who are saying, "Hey, we're going to have like back in the year 2000, they're saying, "Hey, we're going to have quantum computers in the millions of qubits by 2020," and that never happened. So the claims, even the experts don't know all that they're talking about. And for every positive thing on quantum computing, you can find a comparable expert that says the opposite. And so I don't think anybody knows the actual attack surface. And uh, in that case, the market is pretty much the best synthesis of all knowledge at the time. There's nothing that the market can't price in. So that's what I would say. All right, let me check Telegram. Nothing on there. All right. Let's continue then. Let's continue on. So, Bitcoin can adapt if necessary. Quantum computers represent an exciting frontier in technology, but remain far from posing a credible threat to Bitcoin's cryptography. As quantum computing advances, Bitcoin may become vulnerable. However, only after other cryptographic systems with weaker encryption are attacked first, like banks and military applications. Quantum computing progress is uncertain, but extrapolating from improvements in the last 5 years, this worry is still decades away. In the meantime, Bitcoin already has established solutions. Its decentralized nature allows for protocol updates of the nature necessary to address these vulnerabilities. Now, this is a hard sentence for me to write for people that know um, my stance on these things. So, Bitcoin cannot hard fork. A game theoretically, Bitcoin cannot hard fork. And so, the only way we could hard fork is if the old fork dies out, right? If the old, like for example, there is a hard fork that's needed for some integer thing in 10 or 20 years, that hard fork can happen because no, you cannot stay on the old one. You have to upgrade to something, and that upgrade would have to be a hard fork. So that's the only time that Bitcoin can hard fork, and really that's going to be a very pivotal time in Bitcoin's history when we have to do that. But minus an existential existence thing, we can't hard fork, and um, so we can soft fork. And I didn't want to say soft fork, hard fork in the piece. I just said we can do updates like this nature to address these vulnerabilities. Quantum resistant algorithms like Lamport signatures and new address types via soft forks, well, I did say it there, have been discussed for years. These latest eulogies for Bitcoin surrounding the Willow chip announcement are more about confirmation bias among skeptics than any defects in Bitcoin. Bitcoin is not dead, far from it. With robust existing cryptography and a clear path to quantum resistance if needed, Bitcoin is more resilient and forward looking than other technologies potentially vulnerable to a quantum computing threat. So there you go. That's that one. That was a fun one. Check it out. Appreciate everyone that's gone and checked it out. This is my best performing one so far on Forbes. So, yeah, hopefully we can keep this going. Let me bring up the next one. And this one is also on Forbes. Let's hope this page loads because Forbes is notorious for lots of ads. Chair yoga, everybody. Okay, so this title, they kind of switched it on me. But I said Bitcoin doesn't fix everything, but all roads still lead to Bitcoin was my original title. They said, yet Bitcoin, it does reveal the future of credit, which is not a very good title in my opinion, but that's what they went with. So let's get into this one. Oh my God, how do I get out of this ad? Oh, Jesus. I, I don't even see a minimize button on here. Oh, jeez. Forbes. Okay, we'll do that. Okay, so the popular meme Bitcoin fixes this suggests Bitcoin solves a range of global and domestic issues, economic, social, and governmental. This idea stems from the theory of sound money, which posits that sound money provides significant fiat systems. As Bitcoin is the most sound money with a fixed supply and no distortion from industrial uses, it will maximize the benefits of sound money. But is that correct? So, no distortions from industrial uses. This is an important phrase. Um, gold bugs will say, like Peter Schiff will say, it's used in dentistry, it's used in jewelry, it's used in electronics. That's why gold has inherent value or intrinsic value. And that's not the case, of course. Industrial uses actually introduce distortions to pricing because the price of or the utility in other uses distorts the utility of pricing. So you don't get as much pristine price signals in gold as you would in Bitcoin. Okay. The benefits of sound money and Bitcoin's role. Sound money imposes fiscal and behavioral restraints, improving economic calculation, reducing resource misallocation, and correcting for malinvestment, both on an economic and cultural level. This is interesting on a cultural level. So thinking here of like the ethics of money production and how it changes things. And what is this ad doing here? Let me click out of that. It's annoying. Okay, so ethics of money production and how the morals of society can become corrupted uh, outside of sound money, and that is what I'm talking about there. Proponents argue that under a Bitcoin standard, governments would be forced into fiscal responsibility, curtailing wasteful spending on counterproductive social programs, economically disastrous climate policies, politically driven subsidies, black budgets, and expeditionary wars. These activities, good Lord, proponents argue are enabled by money printing and would be unaffordable in a sound money system. On the cultural side, sound money constraints on credit expansion would cause people to pursue productive cultural practices instead of purposefully destructive ones. Groups with radical ideologies would get much less funding. It would lower time preference, leading to greater investment and long-term growth. Okay. So while Bitcoin adoption will bring many of these benefits associated with sound money in time, it is not these benefits that will lead to broad adoption. That's kind of the thesis of this whole post here, that Bitcoin will eventually fix things, but Bitcoin fixing things is not why it will be adopted. The meme's utopian vision of immediate benefits overlooks a crucial reality. Bitcoin will not prevent the coming economic decline. Rather, its adoption is in a response to it. Indeed, this economic slowdown is the driving force behind the monetary evolution towards Bitcoin. Okay, let me check and see if there's any comments before we continue. Studious Stoic says there is much more lower hanging fruit to be attacked than Bitcoin when quantum capability reaches the necessary power. Yeah, and that's if it can. I mean, I'm skeptical of a lot of these things. So, one thing is IBM is one of the leaders in quantum computing. I think they have 1,000 qubit chip or something like that. And they had their roadmap for quantum computing, which was like doubling every 2 years of qubit size. Well, they recently changed that, cutting it off at 2,000. So 2,000 and then 2,000 for the next 12 years or something like that. That's surprising to a lot of people, but it's because they're probably looking to improve their error rate or something, and it's not working out the same way that they thought. And that Sabine Hosenfelder. She said that, um, in the past 20 years, they've been throwing money at quantum computing and nothing's really come of it, right? We have a few calculations solved that now some researchers are being able to replicate it on regular computers, and so it's not even clear what they've bought for the 20 years of all this money just thrown at quantum computing. So when they pull back the funding, there's going to be a lot less progress, most likely. And so IBM, again, one of the leaders here, maybe the leader in quantum computing, is pulling back their expectations. So while I agree Bitcoin is like a second tier target, it's not even the nearest term target. Those near term targets are probably more safe than we think. That's my opinion. BTCP, happy Friday, man. Let me check. Spagball says another Forbes shitcoin special ad. Yeah, I mean, I don't think you can run the ad blocker on this because it won't let you in. So there you go. We got to do this. Spagball says it would be sweet if quantum computing and AI investment money goes into Bitcoin. Yeah, I agree. But it might just be that the taps are closing on all these types of investments. I think more than quantum and AI money coming into Bitcoin, it's going to be the asset price inflation money. So with credit being able to access Bitcoin now with MSTR and printing money to buy Bitcoin, but not printing money from the government side, printing money in the process of making a loan, that could give Bitcoin this asset price inflation hose, that all that comes away from real estate, which used to enjoy a lot of the asset price inflation. It's going to be going into Bitcoin instead. So I've kind of noticed some of that stuff, that kind of connection starting to be made by people. All right. Let's get back into it here. So in this piece, really what I'm doing is I'm laying out my vision for Bitcoin adoption, and that it's not that Bitcoin fixes this, it's that everything else is falling apart. So the real context for Bitcoin adoption, a deflationary era. What then is causing this evolution from credit-based money to sound money? A correct theory of monetary evolution must not only explain the transition from the current system to Bitcoin, but also account for the earlier shift from the gold standard to the credit-based system. And this is one thing I push back on Saifedean. I push back on Breedlove in recent reactions. I push back on a lot of people in Bitcoin that, what they say is the current system is so inflationary, so we're going to go to Bitcoin to save ourselves from inflation. But what they don't explain is that same dynamic existed when gold was demonetized. Gold was demonetized under much higher inflation of the 70s. And it's still lost. So you cannot say the reason this is evolving towards Bitcoin is because of inflation. That does not work. So the only way to be consistent is you have to say that we are not in inflationary times. Right now, we're at the end of a credit bubble, gigantic 50 or 75-year credit bubble. The beginning was this inflationary period that credit was very profitable. We had increasing marginal returns on credit. Gold then is a hindrance because you want elasticity when you have increasing marginal returns. But now we're at the end and we have decreasing marginal returns. And so we're going away from elasticity towards sound money. That theory checks the boxes. The inflationary theory alone does not check any boxes at all. It doesn't check the one today. and it doesn't check the one from the 1970s. Okay, let's continue. Therefore, the negative effects of inflation cannot explain the shift. Why would gold have been rejected during 50 years of rapidly inflating credit markets? That earlier transition occurred because low global debt levels and underdevelopment provided fertile ground for credit expansion and growth, for elasticity. Today, however, we are at the end of that story. The global debt bubble has grown to 315 trillion, over 300% of global GDP, as reported by the IIF. This massive debt burden creates a deflationary environment and looming credit crisis, which are the primary drivers of monetary evolution today. And I need to just be able to knock that guy out of here. Oh boy. Okay, continuing on. We are witnessing the breakup of the modern status quo global economy, driven by deglobalization, diminishing global trust, rising international national self-interest, tariffs, and demographic collapse. All of those things are in the news. All of those things are happening right now. Deglobalization, diminishing global trust, national self-interest, tariffs, and demographic collapse. People are questioning U.S. leadership and the effectiveness of global institutions. Okay. These trends signal a shift away from the unified global financial system towards a multipolar world of regional fragmented systems with high tariffs. If money is debt and these conditions reduce global credit capacity because markets shrinking, literally numbers of people are declining in many countries already. South Korea, Japan, China, some of the biggest economies in the world. And Europe is not far behind, and then we're not far behind Europe. So, literally the market is shrinking of numbers of people, and it's shrinking in complexity because no longer is it going to be one unified globalized system singing kumbaya and doing global trade. We're going to be going back to a multipolar world. And so the credit markets are shrinking, and so the credit carrying capacity of the world's economy is going to be shrinking. We are headed toward a deflation, not inflation. Okay. Going on. If Bitcoin did not exist, monetary evolution would still favor the most sound money available, which would be gold. Diminishing marginal returns on debt. Okay, so the idea of diminishing marginal returns on debt is central to understanding Bitcoin's future role. This is the economic principle that as more debt is accumulated, each additional unit of debt becomes less effective at generating productive growth. Eventually, it reaches a point where new debt can barely sustain previous obligations. This is where we find ourselves today. The mainstream belief is that governments and central banks will print their way out of this crisis, but that would require a fundamental shift in how the monetary system functions, moving from debt-based money creation to direct currency printing, and that's not possible. At least right now, that's not possible in the United States. It can be possible in like the global South, say. Bitcoin's role in this scenario becomes crucial. As credit markets deteriorate, Bitcoin transforms from a speculative asset into a defensive strategic holding. Okay. Then I talk about demographics. Oh my God, that ad is going to be the death of me here. So I'm going to cut it there. You guys can check that out. I think that was a good summation of my stuff. Okay, there's bitcointomarkets.com. Let me go see if there's any more comments. Put your comments down below. 181 people watching. If you're watching on X, I can't see responses from X in here in my back end, but it's easier to interact if you go onto YouTube or Rumble, make the comments there, and you can like and subscribe. Appreciate that. All right, let me see if there's any others in Telegram. Nope. All right, so where are we going next? Let's go to the price chart here before we go out for the weekend. So this is the Bitcoin chart and the pattern that this October 2023 pattern. Now I've gotten some pushback even from the guys over on Telegram. This isn't like an exact pattern or anything, but this is originally a pattern I put in here to show the um, nature of what I thought this accumulation was going to be, or I guess consolidation was going to be. And everybody's buying the dips. MSTR's buying the dips, Marathon's buying the dips, Riot's buying the dips, the ETFs are buying the dips. Everybody's buying the dips. And so it's just going to consolidate in an upward fashion, just like it did back in October of 2023. It just happened to be very much in line with what we did here. This is the same scale, different price, but same logarithmic scale that it's been following. And it's been very, very accurate. If you look at this activity here, it's been very accurate with, so 101,000. Do we break out this weekend? Probably not. Weekends have been, boring ever since it's gotten more traditional markets that are pushing it with the ETFs and the futures on CME and stuff like that. So probably won't break out this weekend. Might break out on Monday, but time is getting short here. And, it is looking like it's pressing up on some levels, eating away. Like there's absolutely no resistance around 100K anymore. That's probably support, as you can see in this little pocket here. That's probably so really there's nowhere else to go but up, because there are still Bitcoins coming off the market every day and going into deep holding with custodians and things like that. So supply is getting smaller and smaller, available supply, and eventually the price will respond. All right, let's take a look at some macro stuff. The dollar, we did this with Telegram earlier. Dollar had a good day or a good run here out of this descending wedge back up to this level that we were talking about way back here in September of 2023. So we'll see what goes on there. You could say there's somewhat of a head and shoulders on this. I don't know about how accurate that is, but I am expecting the dollar to continue higher. US 10-year. This is the surprising one. We were talking about this again. And the interesting thing that I did notice was this gap. When we fell here, if I move this here, when we fell through this area, we gapped lower. And, markets like to fill gaps. And it just happens to be that we've come up here and filled this gap. So is that the end? Is that the end of this rally? We'll see. We'll see. I'm not showing. I mean, let's take a look at some of the RSI and stuff. Okay, RSI is extremely overbought, and this is on the 4-hour though. Let's go to the daily. Still got some room to go on the daily, so we'll see where this ends up. A lot of people are talking about going higher, but they have it mixed up, right? They have the yields go higher as there's more growth in the economy, because yield, especially on the 10-year here, long bonds, the yield is forward growth inflation expectations. And in this current system, when credit is money, as you grow, you expand the credit, right? People are taking out credit to expand their business or whatever. So credit expansion is money printing. So growth is money printing, and money printing leads to higher prices or CPI or whatever. So there should be a correlation with higher yields and higher CPI. And that is what my post was today for premium members on the website. We looked at the 10-year versus the CPI and tried to find if we could find that relationship. And lo and behold, we found that relationship from the monthly to the year over year. As CPI rises, yields rise. It's not the reverse, what people would think. If people would think that as yields rise, that's tightening. So what happens in tightening conditions? Credit creation should slow down, right? That's the thing. Credit creation should slow down and CPI should come down. But that's not what happens. It's the reverse of that. As CPI goes up, yields go up. Simple as. Okay, so that is the 10-year oil. Nothing exciting. Okay, that's going to be it, guys. So let me check comments one more time. The website, bitcoinmarkets.com. BTCP. Off topic. Dude, I love off topic. Bring it. But curious your thoughts on fees on Bitcoin and what your expectations are for those long term. Let's take a look. All right, I'm looking at mempool.space. I'm showing $1.42, 10 sats per virtual byte for the next block. That's not that big of a deal. Did we have a spike this week? I don't think so. No, it doesn't look bad at all right now. Oh wait, that was the 2 hour. Oops. Let's go to the 1 week. No, nothing really big going on in the mempool right now. I mean, I do expect fees to rise in the long term as larger and larger participants are getting in. It'll be more akin to the on-chain network will be more akin to Fedwire, bank-to-bank settlement, government to government, large entity to large entity settlement. So now when there's there's transactions in the tens of millions and higher, billions, then all those transactions will be on chain, and they'll be paying a very low fee of say 20 to $10 to $100 per transaction. But $100 for a $10 million transaction is nothing. And so that's what I expect long term, and that's what needs to happen long term for miners to continue to mine. So we'll see how that develops. So far, from what I understand, is fees as a percentage of the block reward has slowly increased. So it was 1%, say 10 years ago or 5 years ago, and now it's somewhere in the neighborhood of maybe 4 to 5%. So that is slightly increasing, and maybe every 5 years we go another 10% on that, something like that. But it's not going to be all of a sudden fees are very, very high. That's what I would say. Do we normally see the 10-year yields rally ahead of a Fed cut? No, we don't. No, we don't. Let me go back to the chart here. Checking time check here is 5:30. Okay, got a few more minutes. I'm going to clear this up and share this tab. So this is the 10-year. We'll go to the monthly. And we're going to go regular. All right. And not indicator. It is this one. Oh, what happened? Okay. Did I put the same thing on twice? Jeez. Hold on. Where's my lower? And I got to fix this color because I'm anal about it. All right, so this is the Fed funds target range. And so the question was from BTCP, do we normally see 10-year yields rally ahead of the Fed cut? So let's just go back to 2019. The first time Powell cut. Remember, Powell came into office, I think it was December of 2018. And his first thing he did as chairman of Federal Reserve was pause. That was the first thing he did was pause. He said, like, he came in, his first kind of press conference or whatever he had, or something, whatever speech he had, he was like, we're on autopilot. And that was all these 25 basis point rate rises. And then the very first time he had a chance to continue the autopilot, he took it off autopilot and he put it on pause, and then he cut 6 months later. So Powell has already gone through one of these cycles. Okay, so no, you can see the 10-year is falling here. It's falling through. I mean, so we go back here. I mean, this period right here, BTCP, the 10-year did rise and went above the Fed funds target range, but then they still cut and went down. So that was one. Back here, it's not like we fall continuously. There are periods where the yields do rise. Let's see, this one went from 3.5 up to 4. So that's a 50 bip rise. And so far, I think it's been about a 25 bip rise over the last 7 days. So like this type of rise is not out of the question. I mean, so they're cutting here, and we have a rise of amount here, even a bigger one. This one went from 4.4 up to 5.4. So that's a whole percentage point that it went up here as they were cutting. So there are periods like that, yeah. But let's go back to the present. But we're still under this until they cut this next time, which they will get down to 4.25 to 4.5. And I mean, the 10-year, if it were today, the 10-year would be inside of that range. So there you go. We actually uninverted the 3-month 10-year, and that's a big sign because recession very quickly follows that instance. We've also had some updates on the jobs numbers and stuff where it looks like there are some revisions. So it looks like the jobs situation is even worse than people thought. So there's things like that. So we're not out of the woods on recession by any case. Going into recession, my base case comes from yield curve inversions and also from the SOM rule and some other things like just the way that the market is behaving and how I understand the basics of the credit-based system as it dies and Bitcoin's performance and gold's performance and all those other things. Because from the theory, I make predictions, and the predictions seem to be fairly accurate. So then the theory has to be fairly accurate, and that's how I approach things. So the base case is to go into recession at some point very soon. Who knows when it is? It could be first half of next year, could be second half of next year, whatever the case. Maybe they revise all these numbers, that maybe they're fixing some numbers a little bit on the last 6 months. And when they revise all the numbers, as Biden is burning everything down as he goes out of office, then it's actually we're in a recession right now or something like that. I could totally see that. Sorry, I'm kind of swaying a lot and things because my back tweaked it. So, all right, let me check any comments on Telegram. Not seeing anything. All right. So that's going to be it for this live stream, guys. Thank you for joining me. Hope you had a great week. Hope you have a great weekend. Hope you have plans with friends and family. They're what's most important. So spend time with those you love. Make sure you tell them that you love them, and hope you guys have a great weekend. All right. See you on the next one. Bye.